Hey, welcome back to another update of my Canadian dividend investing portfolio series. My voice is a little bit raspy in this video. I'm feeling a little bit sick, but that's okay. You can't catch COVID over the internet, so we're just going to continue on as usual. I want to buy some stocks in this video. Right now the markets are open. I have $10 cash in my portfolio, but in a second I'll be adding more in and I'll show you exactly what that's like and then how I log it in the spreadsheet and so on, and exactly the process that I go through when I'm buying stocks, so you can have a better idea of what it's like to buy and sell Canadian dividend stocks in Canada, growing a dividend portfolio and tracking everything along the way. I think that's why you're here, at least. If you're here for another reason, maybe let me know in the comments, but that's pretty much what I talk about. So anyways, the stock value in my portfolio right now is sitting around $71,000, just under $100. And we're up over 6,000, which is almost 10%, which is cool. That's lifetime. So that's the difference between what I've put in and what I currently have, which is awesome. Super happy to see that. And the average yield of my portfolio is just under 3.9%. And the yield is basically the percentage that these companies are paying out in dividends every year just for holding on to the stocks, whether the price goes up or down. So if you multiply 3.88 times the stock value, you get this value here. It's about $2,759 per year of passive income from stocks. From the dividends from these stocks. Works out to be just about $230 a month. And I'm going to invest some money into the account today and buy new stocks, and we're going to come back at the end to see how much this number changes, because I'm going to be buying around $700 worth of stocks. So to get started, we actually need the money in the account first. So let's jump into Wealthsimple Trade and go deposit some money. So I'm going to go in here and add, and we're going to put in $700. So this is an investment coming from my bank account. Going to go in there and confirm that, and this is the money that we're going to use to buy the stocks in just a few moments here. Okay, so once that's in, we are good to go. I'm leaving a few $100 left for the next time that I want to buy stocks. I have been watching one, I'll get to that in a minute, and I want to leave the capacity of my instant deposits in case I want to buy something later in the week. But yeah, let's go and jump back into the spreadsheet. And the first thing that we're going to have to do in here is just log that I've made a deposit. So I do that down here in the deposits withdrawals tab. This is a master list of all of the deposits that I've made to the account. So I'm just going to label this in my tax-free savings account. It was $700 today. I put in Canadian currency. And today is February 23rd, 2022. So when we look at the summary page now, we have $710 available to trade, which is exactly what Wealthsimple is saying. So now we're good to go. Let's jump into the portfolio and take a look at what is good. By the way, guys, if you are interested in the spreadsheet, you can get it in the link in the description below. Definitely it's worth checking out if you do like having all this extra information for tracking and just kind of like to geek out about your dividend stocks. Anyways, now that we're in here, let's take a look at the percent of holdings. I'm going to sort this by percent of holding so we can get an idea of the biggest positions that I have up here, mostly real estate. And as we go down, we can kind of get an idea of some of the smaller positions down here. Some are even, one is even less than 1% of my portfolio. That's not very much. With the biggest one being almost 9%, which in my opinion is too much. I would prefer to have all of them, no more than 5%, but hey, RioCan was a good buy, and I honestly want to buy more, but I'm just kind of trying to resist that because they're doing super, super well. I also like to sort in here by the percent of the gain-loss, putting the biggest winners at the top and the biggest losers at the bottom. Just helps me get a quick idea of what's going on in the portfolio. I can see some big losses here in utilities and industrials, but mostly coming from utilities there, and that one oddball Cineplex. I have no idea what to do with these guys. I'm just going to hang on and see what happens. Okay, so let's actually switch back, I think, to the percent holding. This is slightly makes more sense to me a little bit. And some of the ones that I was looking at in here are some of the red ones that are in the bottom half of my portfolio, as I like to say, like making up the smaller percentages. So Energex is one of these guys. Severia is another one. And TransAlta Renewables. These ones, what I do here, I've kind of programmed it to have a little plus sign here. If I had an equally weighted portfolio, then I would have 2.78% holdings in each of these companies. And so what I do is I just have this little plus sign here. So anything that's below 2.78%, and this is dynamic, this changes based on how many positions there are. But basically that's kind of my target. So anything that's below that is in my mind for something that I want to buy. It's not an absolute limit, it's not an absolute cutoff, because actually today I will be buying ATD as well. Never mind, they're actually in there too. I thought they were above it. But yeah, it just is a little visual assistance to me to help decide which ones to buy. So anyways, with that said, I'm going to buy a couple of the red ones that are in the bottom here. And I'm also going to buy ATD because ATD is really interesting to me. If we look at the spark line in here, we can see in the last little bit, they're swinging up, swinging down, swinging up and down, and just going like crazy. And if we go out to 5 years, we have nice growth, and again, but swinging up, swinging down, and I'm always trying to buy them when they hit these downs because it seems that they are just going up. Of course, past performance is no guarantee of future performance, but this is what I like to see. I don't want to be buying it up here. I want to be buying it down here, so I'm going to go for that for sure. You can also see it on Yahoo Finance. There's a link here built into this. It automatically updates for every position, no matter which one we filtered for. But if we click on that, it's going to drop us right into Yahoo Finance. And again, we're going to be seeing that exact same pattern, bounce, 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 like a ping pong ball, and just like explosive growth going straight up. So anyways, that is what we like to see and is something that I'm going to be rolling with. Another one in here that I was looking at that isn't not nearly as growth oriented as Alimentation Couche-Tard is Northwest Company. This is like the most boring grocery store company you could ever imagine. They've got a nice dividend yield of 4.14%, and if we look at their spark line, pretty much nothing exciting is going on here in the last 5 years. And if you look at their max, actually it's doing okay. This is actually what we do like to see. I don't know why, but I think last time I looked at this, I imagined it to be a bit more flat. But anyways, they're just nicely growing. Nothing crazy going on here. They just like almost exploded during COVID, but other than that, just nice little up and up and up. So I'm just pretty much going to jump on that for the yield at least. And if there's any appreciation in the stock price too, I will take that. So that's mostly it. I think there was another one in here. I talked about Savaria, yeah, as well. These guys, just red, and red. These ones I was just looking to pick up because, yeah, like they're in the bottom half, and I'm just trying to reduce the average price, whereas some of the other ones are not going to be reducing the average price, but they're just nice stocks to own. Let's jump into Wealthsimple Trade again and take a look here. What do we got in here, actually? I never really look at these charts, but they're kind of interesting. You can see a slightly different view because the spreadsheet doesn't show this, but just nice little kind of staircase going up. You basically want to be seeing this green line, you know, expanding above the gray line, showing you that you're kind of making nice gains as we go. Speaking of Wealthsimple Trade, actually, there's a link in the description below as well. If you would like to try it out, there are some links there. You can get 2 free stocks for signing up. It's an awesome platform with 0 commissions, and I love this app. I'm for sure using it for all of my investing so far, and definitely no complaints with it. So anyways, let's get started and pick up some of these stocks. So ATD is going to be first. And these guys, I want to pick up around 3 of these. So it's just going to be just under $150. Nice. It's better than if I had bought them earlier in the day. Okay, so we're going to buy those. I'm going to buy 3. We're going to the tax-free savings account, which is what we want. I'm not at my limit yet, so I can keep putting money, depositing money into the account and spending more of it. Okay, another one that we were looking at was Northwest Company, NWC, and again, these guys, nice little bit of growth there. Nothing fantastic, but pretty solid yield. With these guys, they're around $35, I think, and I wanted to pick up 3 of them, so it's going to be around 100. So we're just going to drop that into the tax-free savings account as well, and hit done. Okay, Interjex. Let's take a look at these guys. These are pretty interesting. They peaked out so hard and have just been dropping like crazy ever since. But in this case, I'm just reducing my average price. I was holding them at this point, and I thought on this day, I was like, man, I should really sell these, but I didn't. Such is life, and now I got to deal with that. Basically ride this down, reduce the average price, and eventually make back some of that money in the yield, which is actually pretty good, and if they ever recover in the stock price. So with these guys, I want to take about 6 for just around $100 as well. We're going to buy that. It's also going to the tax-free savings account, as with everything these days. Probably going to be for like the next several months, or maybe even the next year, into the tax-free savings account until it is maxed out. Okay, SIS, Savaria. These guys, the last 5 years, they're also coming down from a recent high, and that's okay. I have dropped into the negative with them, and so I'm just going to start writing this down, reducing that average price as we go, and taking the yield. The yield's not so high, but they're paying monthly and strong candidate for dividend growth. So with these guys, I also want to take about 100, so we're going to take 6 shares in them and confirm that order. Okay, cool. And then the last one here, just with the remainder of the cash that's in the portfolio, we're going to go for TransAlta Renewables, RNW. And I think I'm actually going to take around $100 worth of these guys as well. Maybe we'll go up to 115. Let's do that. Gonna drop that in and take those. Okay, cool. And to be honest, I actually thought that that was going to be all the money I had, but I guess there's $100 left over, so I think I'll just drop the last into Aecon. Aecon is an industrial company that I'm currently down just a tiny bit on, 1%. They swing up and down like crazy, and I'm pretty much going for a swing trade with these guys. I would like to sell them if they recover. If they bump up like 10% or something like that, I'll probably cash out. And even if I don't, their yield is pretty strong at 4%. So I'm just going to dump the rest of the money into these guys. It looks like I will be able to get probably 7 shares. And we're going to throw those into the tax-free savings account as well. All right, cool. So there we go. Now we spent all the money in the account. That's fine. What I need to do now is just go into the activity tab here and take a look at all of the purchases that I've done, so the exact quantity and price of each transaction. And I want to bring that into the Google Sheet. And we're going to come into the transactions tab to make this happen, which is a master list of all of the transactions that I've ever done. So what I'm going to do in here is drop them in with the exact quantity and price as we saw in Wealthsimple. And once I'm satisfied that all of the totals do match exactly also what was in Wealthsimple Trade, because this is calculated automatically, then the last thing to check is back in the summary tab, mostly to see how has the dividend income been affected. It's also worth checking that the cash here matches with what you currently have in Wealthsimple, which in my case it does. And but here we're looking at the dividend income. So at the beginning of the video, if you remember, we were sitting around $2,759. And now, based on these approximate $700 worth of stocks that we bought, we're up to $2,783. So that's an increase of about $24 per year, or about $2 per month, which might not seem like a lot to you. It might seem like a lot, I'm not sure. But for me, it's just awesome to see, because every time I deposit more money and buy more stocks, or just buy more stocks with the dividends that I receive, for example, with this $231 that I'm receiving pretty much every month, or you can see exactly the amounts received each month, that's all going back into more dividend paying stocks and really building up this compounding effect, getting that like sort of very slow but exponential growth in the balance of my portfolio. So that's awesome, guys. If you watched this far, that's pretty much it. Thank you so much for watching, and please leave a comment down below. I'm always curious to see what you guys are buying this week, and if you're interested in anything to do with that tech sell-off or not, or if you're just staying with the more conventional, safe, boring dividend companies. I'd love to hear it, so I'll see you guys down in the comments and in the next video.